Hello my fellow freedom builders, and welcome to yet another video, this time about clickbaity YouTube titles and block titles and why you should avoid them. My argument here today is that if you're going for the clickbaity titles, maybe a bit like my clickbaity title today, then you are in a pretty bad state when it comes to your investments. Now this video is tricked, or the idea came from a tweet I saw the other day. It is from a larger YouTube and Twitter channel, and the author here predicted, maybe you couldn't say predicted, but the only writing here says this time is not different. And then we saw a picture of 2008. We know that was a big recession and a big drop here. And then we saw some drawings here from 2023. And this is the problem with it all. This is not to hit on this particular channel or Twitter account. It is more of a broad comment because I see this all over the place. When we're looking at YouTube, we are seeing at scared faces saying the real estate market is going to crash, or the end of all banks, and this time is not different, indicating that we will definitely get a crash. And we are getting it all over the internet. And there are several reasons why these people like to come out with these statements. And I know they are many. We have recently seen Elon Musk. Not that this was particularly clickbaity, but he says there are some similarities between 1929 crash and now, and why investors should be worried. This is a bit of a clickbaity title, even though it's Forbes, and even though this was actually not even Elon Musk's intention to be clickbaity here. The Forbes try to put an angle on it that should investors be worried. Well, maybe we should. I'm not trying to predict if the market is going up or down. I'm just pointing out a problem here. Let's have a look at another one. This is Nassim Taleb, the one that wrote the Black Swan book. The market is heading for a tinderbox time bomb that will be worse than the 1929 crash, Black Swan fund manager says. All right, well, how can he be wrong? He wrote a book, so he must be right. This is a clickbaity title. What do we have here? Macroeconomist Henrik Seberg warns worst market crash since 1929 incoming. All right, I simply need to see this filled article here, taking some stats out, saying something about the 2000 crash, something about the 2008 crash, and then something about right now. Now, do I think there are a lot of bad stuff in the economy right now? Yes, definitely. And it could lead to a crash. The problem is nobody knows if it will come. If it comes, they don't know how bad it'll be. And if they come, they also don't know exactly when. And that means that people are going to sell a lot of the shares because they're scared about a big crash. And then the market may even go up for a year or 2 or 3 more before a crash eventually happens. What more do we have? Well, there is of course my favorite non-guru, Robert Kiyosaki, that has been predicting a crash since 2002. And he kept predicting and kept predicting. And if we're looking at that, I made some funny graphs with the stock market showing all the times he predicted a market crash. But for instance, he said here in 2003 that it was all going to get worse. And then the market skyrocketed 80% in a couple of years. Now, he kept saying a crash would be coming, and all of a sudden we had a crash, and now he's saying I'm the one that predicted the 2008 crash, which is kind of easy if you keep predicting. He also said that 2016 would be the worst stock year in decades, and then the market went up something like 40%. And he has kept saying this, and of course he's saying it again right now. And there are several reasons why these clickbaity gurus are coming out. One of them could be that they actually believe we're going to have a crash and that they have a bias, and then they take a look at the stats and they might find something in the stats that the stats are not really supporting. That is what is called a bias, or an error in a bias, and I'll take a look at that in a second. There could also be a less a bit worse, actually, good thing here, and that is that this guru is trying to sell something. And there's no doubt in my mind that Robert Kiyosaki has sold something like 100 million books telling people that the crash is coming, and this sky is falling message over and over and over again can be a bit deceiving, and it sells a lot of books. So if you have listened to him since back in 2003 and stayed out of the market, you would simply have missed a 400% uptick in the market here over the last 20 years. So there's that. And there's also other reasons. It could be that the guru or analyst is actually right, but just has the timing wrong. Now, we saw that with Michael Burry, for instance, back in the big crash in 2008. If you have seen The Big Short, the movie, you know that Michael Burry, actually, his fund almost went bankrupt simply because he was a couple of years late. The same as I did. I thought the crash was coming here in 2006, and Michael Burry thought so as well. I did it completely out of technical analysis, and Michael Burry looked at the fundamentals and the macro picture. However, we came to the same conclusion, and he kept going short in the stock market. Unfortunately for him and his investors, he was right before he went bankrupt. So a guru, an analyst, might actually be right, but wrong on the timing if they're looking at the big picture. So that is another thing. And then basically what many of these people are doing is they are looking at a way too simple picture, because you cannot just take a 1929 graph and compare it to a 2023 graph, because the world is different. There are so many different things. I'm not saying the famous word that this time it's different, meaning that the market will not crash. I'm just saying you cannot compare two graphs from 1929 to now. That is simply not possible. What often happens there is that people are using some stats, using only 3 or 4 or 5 data points, and that is not enough to build a good solid stat. I have a website here that I want to show you. It's something called Tyler Weigen or Weigen.com. And he is collecting funny correlations. And that is a bit of my point here, that often we are seeing correlations in the market, but that does not mean causation, as they say in science, meaning that just because we can find two data sets that fit together over a relatively few number of data points, then it doesn't mean we can predict the future. There are some quite funny ones in here. For instance, we have a graph of the number of people who drowned by falling into a pool compared to the number of films Nicolas Cage appeared in the year. And we can see that there's a very good correlation. And from this graph, you could, of course you can't, but you would maybe predict that the number of drowning people would go up now because the graph of Nicolas Cage movies have gone up. How about the per capita cheese consumption compared to the number of people who died by becoming tangled in their bed sheets? I don't know why these stats should be so morbid, but here's another one. Divorce rate in the state of Maine compared to per capita consumption of margarine. As you can see, they follow each other quite well here, which means that if we are seeing an uptick in the consumption of margarine, we will definitely see a higher divorce rate in the state of Maine. Or how do you think it goes? So what I'm saying here is that just because an analyst are showing you some similarities between 2023 and 2008, or the .com in 2000, or the 1929, it doesn't necessarily mean that the world is going to crash. There's another website here. I'll link it below. And we can see here failed stock market crash predictions. And this is from some of the really big guys, the fund managers. This is 2012. That would be a really catastrophic year. And then 13, and then 14, And then 15. 15 was a tough year, but not a complete collapse. 16, definitely a big crash here. Of course, as we saw, it was a fantastic stock year. 17, we would see an 80% stock market crash to strike in 2017. Oh, really? Did we now? Well, let's have a look. Oh no, it was a fantastic year here. So just be aware that when you're reading and seeing all of these clickbaity titles, they are trying to come out even as someone that knows the market. Maybe they really believe it. Maybe they're trying to sell something, but you should really, really be careful believing all of these predictions. The arguments might sound completely rational and very good, and you're thinking, all right, when they know so much, they can probably predict the market, but no one can. That leads me back to this one here, saying, all right, this is a rejection prediction, and it seems very reasonable because we do have a line here, and why shouldn't it go down from here? Well, let's have a look at this, because in my opinion, this is simply bad technical analysis. What they have done here, and I'm not completely certain how they got this line the way they have. Maybe it's because it's a monthly chart, but it should be something like this. And what they're doing here is they're drawing the line down here at the bottom, and then they are shooting it up here in a parallel fashion so that we get a new line up here, and they're saying, all right, this should be about where the top is. We must definitely go down here. Now, there is an error here. When you are in an uptrend, you are drawing the main trend lines in the at the bottoms of the chart, and then you can shoot this one up parallel to see if you can fit some tops in there. But when you are in a downtrend, you will fit it at the tops, because that is where the sellers come in, and the tops are somewhere around here. And then we can take it down in a parallel fashion here, like this maybe, or like this, or wherever you want to draw it. And that shows us that we are actually in an uptrend. Now, I'm not saying that the market can't crash, because of course it can. No one knows where the market is going. What I'm saying here, and that is one of the ways I'm looking at the market, is we're looking at a weekly chart here, and we can see lower bottoms, lower bottoms, lower bottoms, lower bottoms, almost not lower bottoms here, or at least about the same level, and then higher bottoms, higher bottoms, higher bottoms, meaning that we are on the weekly chart in an uptrend now. Now, this can easily break. I'm not saying this can go on forever. It's just to say that we are not in a downtrend, and saying something like, this time is not different. Well, it might be right, but this is not the argument for it. Definitely not. And then another thing, if you are to draw these trend lines, and that is the deceiving part about trend lines, because if you already have a bias, you tend to draw the trend lines where you think it'll fit into your bias. Because why would you draw the trend lines here? Let me just see if I can fit this in somehow. Why would you draw the trend lines here? Why wouldn't you draw them here? Because if you did that, we would definitely be somehow in a, depending on where we draw this, we might find a way to tell us, okay, we are actually in an uptrend now because we broke something here. You can draw these lines wherever you want to, and therefore you need to have some quite strict rules saying that you cannot just find 2 points here, and definitely not in a downtrend find 2 bottom points and then just shoot them upwards. That is not how drawing trend lines works. You need to find, in a downtrend, you need to find some good solid tests, and it could be that this actually should be the next top here if we are going down, but then it can't be used unless we come down here, go up again, and then use it as some sort of prediction that this is where it is rejected. You cannot just draw a trend line out in the middle of nowhere and then saying, this time is not different. That is not how it works, but it looks deceivingly simple and easy to use. And if it is a YouTube channel that is very large, like this one, or it is an analyst that you know the name of, or it is from a big bank or whatever, they have some authority and people tend to believe them. So what I'm urging you to do is, of course you can watch the clickbaity titles. The thing is, they get 10 times as many clicks as my a bit more boring titles. But the thing is that you should take a chart, and then you should have a look at it, and then you should make up your own mind. What do I actually think of the market? Is it showing higher bottoms, higher tops? I can tell you that to my subscribers, my Danish subscribers, I have this model. It's a statistical model, and I'm definitely not saying that it is predicting with exact precision. However, it is fairly good at finding tops and bottoms. I'm calling it the TPI, the turning point indicator. And that one showed that here at the end of December, start of January, we might see a bottom. And what I said to my customers was, if that is confirmed over the next couple of weeks, then we have a higher bottom here, which means that we have probably seen the bottom of the crash in the market. This is what happens with a lot of volatility, and it can easily go down from here, and then I'll reassess the charts and the lines I'm drawing here. But I'm just saying that at a point where a lot of clever people were saying we are going to see the worst January, the worst Q1 in history in the market, my model said, well, I'm not so sure. I didn't know it, but I just said this is what is indicated by the buyers and sellers in the market. So my point here today is that look through your YouTube and your Twitter and your Facebook and see if there are any of the content providers that you can see are usually using a very scared face with a big flashy clickbaity title like the world is going under or the crash is coming or minus 80% or something like that, and then maybe filter them out, because they might affect you to not take some good buying opportunities in a bull market because you think the market is going to crash in a second. That is my point today. I hope you took some inspiration from it, and as always, feel free to give me your comment under the video. Take care of yourself and your money out there. I'll talk to you again shortly. Bye.